I'm Darius McDermott, Managing Director of Chelsea Financial Services. Today I'm with Kevin Troup, who's the Lead Manager on the SLI Global Equity Income Fund. Kevin, Standard Life has a distinct investment process. Would you tell us a little bit about how you go about picking stocks?
Yeah, Darius, first of all, we are absolute stock pickers, company level stock pickers. That is what we do. So we do not start with a macro view of the world, a sector view of the world, or a thematic view of the world. We are looking for underlying company change. Our focus on change investment philosophy looks to identify those companies that are changing, but where the share prices do not adequately reflect the degree of change that's taking place. What is different perhaps from other funds is that we do not just stick to this focus on change just in value sectors or growth sectors. We're looking for change across the spectrum. And that type of change can be internal or external. So it can be a company moving into new products or new markets, corporate action, but also looking at technology change, competitive change, regulatory change, all types of change, again, across the spectrum.
One of the things your fund does differently from others in the global equity income sector is you sometimes invest in convertible bonds. Would you tell us a little bit about why you do that and how often you use that opportunity?
Sure, Darius. Again, starting with the focus on change philosophy, once we've identified a company going through change, which we don't think is adequately reflected in the share price, we then look for what is the best vehicle with which to express that view on that underlying company. And looking at a risk-return sort of trade-off between not only the ordinary of the company, ordinary share, but also perhaps looking at convertible bonds. And sometimes the risk-return can be very good in that you participate in a lot of the upside, but sometimes in convertible bonds you are protected.
You get lower downside.
Lower downside, yeah.
And how much do you have in convertibles roughly at the moment?
Well, we have scope to go up to sort of 20%, and we have had 5% or more in the past. Currently, with the low rates of interest rates and convertible bond interest rates at the moment, we don't have any at the moment, but we do have that flexibility, and that is important to reflect.
Good. And where are you seeing opportunities? Because you're a global fund manager. You have a wide basket of stocks to pick from.
Yes.
Where are you finding change that is popping up more prevalent at the moment?
Well, I think our weighting within financials has moved quite a lot over the past few years. And we took it down dramatically last year and the year before when there was regulatory change taking place, litigation costs and fees were rising, capital constraints were taking place in the business. But what we're seeing now is a lot of these headwinds in these three areas are now beginning to flow away. So litigation is calming down. Regulation is calming down. Look at what Trump's talking about in the US in particular for US banks. But also there's a sense that globally the regulators are being less constrictive in terms of the amount of capital that banks have to hold. And so that's meaning that there's more likely to be more excess capital in the system going forward. And there's individual banks that can return a lot of that excess capital back to shareholders, which is ideally what we want to see in terms of dividend growth or special dividends.
And is there any geographic preference that the fund has at the moment, or is that sort of just pretty neutral to a sort of global benchmark?
Yes, well, as you know, we don't invest based on a sort of global view of the world or a macro top-down view. So, but what we're seeing, I think, is we've been very underweight the US. Still, US companies are still improving and doing more for shareholders than they have done in the past. So our weight in US companies has naturally risen.
And with that financials exposure, of course, as well.
Correct.
Yeah. Thank you, Kevin. That's excellent. Cheers.
Thanks, Darius.